But for the time being, we're going back to the EMS space and putting the spotlight on yet another company you just heard from Sirma. Now it's time to tell you a little more about PG Electroplast, because the company also came out with numbers. Fourth quarter was a fairly strong one for PG. Healthy revenue growth and margin expansion as well was witnessed. So let's talk about this performance with Vikas Gupta, MD at PG Electroplast. Mr. Gupta, thank you so much for joining in. It's been a good quarter. And for our viewers, I just want to put up the FY25 performance as well. Good quarter and good year. In FY25, you've grown at 77%. Your margin is almost touching 10%. So, sir, let's talk about the outlook on FY26. Just break it down for us in the room AC segment and, washing machines, etc. What do you see ahead? Because there's been some concern, particularly on air conditioning, about the weather, perhaps dampening demand in some pockets in April. Your thoughts on how this year has opened out for you?
Good morning, Surabhi, and thanks for having me on your show. Specifically, when we talk about FY26, we have already released a guidance where we are saying that we will grow our revenue again by almost around 30 to 35%. And when we try to break it down into each product categories, like last year in air conditioners, we did a revenue of almost around 3,000 crores. And this year, like in FY26, we are targeting a revenue of almost around growing by 35% to almost around 4,000 crores for air conditioners. Similarly, in washing machines, we did a revenue of almost around 440 crores. And this year in FY26, we are targeting to grow that business beyond 600 crores. We are targeting almost around 650 crores coming from washing machines. So all those product categories are kicking in well, and we are confident that we should be able to give the revenue growth of 35% for the FY26 for the full year. Regarding the demand specifically for the air conditioners, yes, definitely there has been some kind of a slowdown on the industry level. But for us, specifically when we talk about PG Electroplast, because we are serving 35 plus brands in air conditioners, and we are confident that in the kind of order book that we have with the clients right now, we are confident that the revenue will grow.
But tell us one thing, Mr. Gupta, and if I look at the growth trends as well, it's a little volatile. I mean, you've had years where you've grown the top line at 100%. In FY24, it came down. Last year, it was 77%. Now you're guiding for 30 to 35. Why is your guidance of growth for this year lower than last year? And this is when you're commissioning new capacity as well. I believe there was a line that was commissioned just earlier. So what is the steady state of, let's say, CAGR growth, top line for PG over the next 3 years? What should we expect? And why are you more conservative on FY26 versus the last year?
So, Surabhi, please understand, we are releasing a guidance based on the current visibility and the current order book that we have with our clients. You have seen in past also, we have been upgrading or revising our revenue guidances. So we feel that we will keep on updating you in the coming quarters. But as of now, the growth that we see is almost 30 to 35%. And regarding the horizon for next 3 years, we are confident that we should be able to maintain a CAGR growth of almost 35% going forward as well.
All right. Hi, Mr. Gupta. Good morning and good to see you. But, I need to compliment you as well as the team. I recall 3 years ago, there was no institutional holding as well in the company. And now because of the fundraise and the likes, you have 25% from institutional itself. So clearly, there's a lot of interest in the stock. Now, one factor that I want to focus on is your Capex. The Capex for the year, I believe, is around 8 to around 900 crores. Could you break it down for us between RAC, compressor, washing machines, and plastic? First, break that down. Then I have a couple of more questions on the compressor segment.
So, Nigel, good morning. So what we are trying to do is now the Capex that we have planned for this year for 800 to 900 crores, please understand we are trying to position ourselves for the next round of growth in next 3 to 4 years. So we are trying to build up more plant, we are acquiring more land parcels, we are building up new buildings. And so that will cover the majority part of the Capex, like almost 600 crores will go into the acquisition of new land parcels and the construction of new buildings. When we talk specifically about the product categories, like we are targeting a Capex of almost around 350 crores to 400 crores in the RAC segment, which covers the compressor part as well. In washing machines, we are targeting a capex of almost around 100 crores. And in refrigerator, there will be a capex of almost around 160 crores on the plant and machinery side. But if you look at the total capex, which includes the land and building, the capex should be almost around 300 crores in refrigerators.
Okay, all right. I want to focus specifically on compressor. That's the talk of the town, right? You announced this more than a quarter or so ago. But what's stopping you from announcing the JV partner, sir?
So, Nigel, so we have not closed the agreement part, which is still under the legal vetting, which we should be able to close in next 2 to 3 weeks' time. On the background side, we have already started the working with the technology partner to develop the building and everything. So that work is still going on. And we are still hopeful that there will not be a much delay in that. And we should be able to start the mass production for compressors by January of 2026.
When do we announce the partner's name?
So we should be able to do that in next 2 to 3 weeks' time.
Okay, all right. We'll have you back on the channel then at that point of time. But just one more question on this compressor part. If you assume 100% compressor will be used for captive consumption, then what's the kind of peak, say, gross EBITDA margins the company can achieve? Suppose you assume everything is used captively.
So, Nigel, I'll just make a small correction on that. So we are putting up a 5 million capacity in phase 1 for compressors. And in that, almost 50% will be used for us. Like almost 2.5 million compressors will go in for captive consumption. So that will be a margin accretive. I may not be able to give you an exact number by how much margin expansion will be there. But balance 50%, which will generate a revenue of almost around 750 crores, go for sales to the outside customers.
All right, but rough margin difference in basis points, I think you can give us a band, Mr. Gupta. Captive versus...
So we should be able to see margin expansion of at least 1.5 to 2% in that case.
150 to 200 basis points. Got it.
Got it. Vikas, hi, morning. That partnership for compressors, is that with Highly?
So, Prashantji, it will be difficult for me to comment on that. We are still not able to close that legal agreement, so I may not be able to make any specific comment on that.
Okay. The reason for viewers, the reason I asked about Highly is because most of the compressors that you you ramped up your during the compressor shortage, I think you got them from Highly, and there was talk that you probably will tie up with them. But I understand we'll wait for that agreement to be closed, and we'll get you back on as well. On plastics, because if you can tell us a little bit more, what exactly, which segments are you doing? What are you doing right now?
So the plastic molding is also seeing a very strong momentum for us. Like it has surprised us also. And this year, we crossed 1,000 crores of revenue in plastics molding only. What we feel with the current geopolitical situation and with the tariff thing going on, we are seeing a lot of RFQs. We are seeing a lot of queries for the global requirement from our international clients. So we feel going forward, the plastic molding business should also maintain a good, healthy growth rate. And we are hoping to crack some good global business also on that front.
Are you, by the way, Vikas, going to look at, or are you already kind of working on this entire GLP-1 opportunity in any way? I mean, injections and that kind of thing? On the plastic side? No, nothing.
No. So not on that side. So we have some clients which are our existing clients for India market. We are exploring some their global requirement RFQs as well.
But would you be open, since this is a new segment and it kind of is expected to have a very long runway, would you be able to pivot to it? Have you looked at it at all? Or this is completely sort of, away from what you want to do or what your capabilities are?
So, Prashant, as of now, we have not explored that, but going forward, definitely we are open to new ideas as well.
Okay. Mr. Gupta, just 2 quick points on margin. You've already given us a hint, right? ACs are such a large part of your business, and that business will see margins expand maybe more than 100 basis points as you start using these in-house compressors. Overall, for margins, you ended 25 at about 10%. So 26, 27, how should we expect the margin profile of the company to change? And also just tell us, in terms of the PLI for this year, with this electronics PLI scheme being announced, are you hopeful of getting any PLI benefits this year?
Regarding the margin specifically, if you look at, we have given a guidance on the PBT level also for FY26. We like to stick to that. Please understand, Surabhi, so we are in a contract manufacturing business. We cannot expect a very high level of EBITDA margins in this because, again, this is a contract manufacturing business. Okay. Regarding the electronic component manufacturing scheme, this is a scheme which has come out recently. We are also trying to go through that. And we are looking to participate in that in certain component categories.
And in which categories do you think you'll be eligible? Where would this be of interest to you, the electronics PLI?
So the electronic components manufacturing scheme, we are looking at least 3 to 4 components. We are talking to various potential partners in that. And we should be able to make some kind of definite comment on that maybe in next 3 to 4 weeks' time.
All right. And also, besides the profit and loss account, your net working capital days have come down a little bit, I think by around 5 to 6 days. Could you tell us what is the outlook out here and is there further scope for improvement?
So what we feel, Nigel, as before the ramp up for this season, we try to build up some inventories in our to take care of the AC business. So what we feel as the component ecosystem starts developing and the compressor thing starts coming out, so we should be able to further normalize our working capital days.
All right.
You want to give us a number, sir?
So it will be difficult to give any specific number on that right now.
All right, because we leave it there. We wish you all the best of luck as you and your team continue to execute and look forward to our next conversation. Thank you very much for joining us. So that is PG Electroplast with some perspective